Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-age updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Public, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Hello, everyone. Today, we're going to be breaking down something really big that's quietly happening behind the scenes in the crypto world, and it involves XRP. One of the biggest questions we get all the time is, are the big players even paying attention to XRP? Isn't this just a retail hype coin? And I get that. It's a fair question. But let me tell you a story. Think back to the early 1990s, before Amazon became a household name. While everyone was focused on local bookstores and traditional retail, a small group of investors quietly built a global logistics and commerce network that the public barely noticed. Those early players weren't just speculating. They were positioning for the inevitable future. That's exactly what's happening with XRP today. By the end of this video, you'll see how XRP is quietly being built into the backbone of institutional finance and why ignoring these now could be a huge mistake. Before we dissect this, I want to thank everyone who takes the time to like, subscribe, comment, and support the channel. It truly means the world. And with that being said, let's dissect this, ladies and gentlemen. Most people think XRP is just for speculators, retail holders, traders, and online forums. But XRP isn't just being held, it's being strategically integrated into financial networks that span the globe. Here's what makes XRP unique. It's not just a store of value like Bitcoin. Sure, Bitcoin has become digital gold, but that limits its use. It's essentially a collectible for those who already believe in Bitcoin. It's great for wealth preservation, but it doesn't touch the broader financial system in meaningful ways. Think of Bitcoin like early baseball cards. Yes, they have value if you hold rare ones, but they don't help you pay your rent, buy a home, or send money across the world. XRP, on the other hand, is more like the invention of the credit card. It's a tool that lets people move money efficiently, instantly, and securely. Banks can integrate it without changing their systems entirely, and consumers benefit too. XRP is a utility token designed for payments. That means it's actively being used for liquidity, cross-border transfers, settlement layers, and more. Banks, payment providers, and institutions can leverage XRP not because they want to hold a coin, but because it solves real problems in finance. This dual role, as both a potential store of value and a functional payment tool, is exactly why the big players are paying attention. I want to talk about real-world proof of institutional interest. Now let's get into the proof, ladies and gentlemen, the part that really separates speculation from reality. Recently, a report surfaced from JP Morgan, one of the largest banking institutions in the world. This wasn't a public press release. It was an internal strategy brief prepared specifically for a large international banking partner in Russia. The document analyzed multiple digital assets for institutional adoption and operational utility, and XRP came out on top for its speed, liquidity, and low transaction costs. What's interesting here is that the report explicitly highlighted XRP's ability to disrupt cross-border payment systems. To quote the summary, Ripple's XRP demonstrates characteristics that make it highly scalable, cost-efficient, and extremely attractive for institutional deployment across global payment networks. Marinate on that. Let that sink in right now because that's massive. Again. Now, why is this important, you're asking? Because this document was not meant for public consumption. It was an internal briefing prepared for executives who manage billions in cross-border capital flows. Somehow, the report got leaked. And yes, we were able to verify its authenticity. The source indicated that someone within JP Morgan's research department who follows XRP closely shared it with a trusted party outside the bank. Ladies and gentlemen, imagine being a banker in 1995 who sees the internet quietly growing while the world laughs at websites. You research it, understand its potential, and prepare your firm to adopt it before anyone else. That's what this report shows. JP Morgan is quietly preparing the infrastructure for XRP adoption. just like the early tech investors positioned themselves for the web boom. The leak is significant because it confirms something we've been saying all along. The factors retail holders love about XRP, fast settlement, low fees, liquidity, are the same reasons top-tier financial institutions are quietly adopting it. It's massive. And this isn't a one-off observation, folks. Older JP Morgan reports also highlight XRP's utility, reducing transaction times and fees, enabling currency conversions, facilitating commodity trades, and even supporting foreign exchange operations at scale. They also noted that if XRP succeeds in clearing regulatory uncertainty, adoption could accelerate dramatically. So when you see headlines about XRP, remember, while retail chatter gets the attention, real money is quietly moving behind the scenes, guided by meticulous research from the biggest players in global finance. Why Bitcoin alone can't compete, ladies and gentlemen. Let's pause for a moment and talk about why XRP is different from Bitcoin in a very practical way. Bitcoin has focused on being digital gold, a store of value. And while that has created enormous wealth for early adopters, it comes with limitations, scalability issues. Bitcoin can't process large volumes of transactions quickly. Utility limitations. Bitcoin doesn't integrate seamlessly with banking rails for payments. Speculative framing. Its value is mostly determined by perception, not usage. Think of it like the first telegraph. Networks. Bitcoin is like sending a single Morse code message for years. Valuable, yes, but limited in utility. XRP is more like the introduction of fiber optic cables, enabling instant communication at massive scale. That's the kind of transformation XRP brings to financial transactions. XRP, on the other hand, was built to be a working tool for finance, not just collectible. It can move large sums of money in seconds with predictable fees and minimal friction. And as adoption spreads, these features aren't theoretical. They're actively being deployed. This is why institutions see XRP as more than just another cryptocurrency. It's a core financial tool, not a speculative play. I want to talk about the XRP legislation and regulatory clarity. Let's talk about this regulation for a second, because this is where XRP really stands out and shines. While Bitcoin has been in a gray area for decades, XRP has been actively navigating the regulatory landscape. Recent legislation and policy updates had explicitly included XRP in discussions about digital assets and payment infrastructure. Think of it like the railroad expansion in the 1800s. Early investors risked capital, but governments regulated tracks and routes. Those who compiled and built legally thrived. XRP is following a similar path today, positioned legally and technically to become a backbone for payments. This means XRP is not just surviving in the regulatory space, ladies and gentlemen. It's being positioned as a compliant and ready for mainstream adoption. And that's exactly why the largest financial institutions feel confident using it. Contrast that with other digital assets that have no regulatory clarity, zero, nothing. Banks can integrate them without exposing themselves to legal risk. XRP already has multiple licenses, legal opinions, and compliance protocols in place, making it a ready-to-use tool at scale. I want to break down some key adoption numbers right now. Global banks. Multiple international banks are testing XRP for liquidity and cross-border settlement. Transaction speed. XRP moves funds across borders in 3 to 5 seconds, compared to days for traditional banking. Cost efficiency. Transaction fees are minimal, far cheaper than legacy banking. So imagine a small business in Thailand trying to pay a supplier in Germany. Traditionally, it takes 3 days and costs hundreds in fees. With XRP, it's done in seconds, almost free. That's why banks see it as more than a coin. It's a solution. These aren't just numbers. They represent massive potential for institutional capital flow. When large banks integrate XRP into their treasury and settlement systems, the ripple effect, no pun intended, is enormous. And just like the leaked institutional reports we referenced, this is not theory. This is proof in real-world adoption. I want to talk about the global ripple effect. Think about it. When banks start adopting XRP at scale, they create a network effect. More liquidity, XRP becomes the bridge for international payments, faster settlement, Corporations and banks move money instantly. Lower fees. Customers and partners save money. Adoption accelerates. New markets. Emerging markets gain access to fast, reliable transfers without needing traditional banking infrastructure. So, from a historical analogy perspective, it's like the telephone network expansion in the early 1900s. Early adoption by a few businesses led to massive network effects. XRP is following the same pattern, quietly building a financial telephone network that spans the globe. This is how XRP can quietly become the backbone of global finance without anyone outside the industry noticing it, until it's too late to ignore. I want to talk about countering the critics. Many people ask, why should we trust this? Why should we trust XRP? That's totally valid. There's skepticism always when new things come about. In history, you see this everywhere. But here's the difference. The proof doesn't come from myself. It comes from internal high-level institutional documents like the leaked JP Morgan report we just talked about. This particular report was prepared exclusively for a major Russian bank, and it wasn't intended for public eyes. It breaks down exactly why XRP is superior for liquidity speed and cross-border payment efficiency, and why it's posed for adoption at scale. The fact that someone inside JP Morgan took the time to share this document indicates just how closely they're watching XRP and how much weight this analysis carries. So imagine the first skyscraper engineers in the 1920s, quietly studying building techniques and materials while the world was skeptical. That's the kind of behind-the-scenes preparation happening with XRP and banks today. It's easy to miss retail perspective, but when one of the largest banks on the planet is performing internal strategy analysis, that aligns with the same conclusions we discuss here, and actively preparing recommendations for internal partners. That's the proof that XRP's institutional story is real. This isn't speculation. This is evidence. Large-scale banks are not only studying XRP, they're quietly positioning themselves, preparing their networks, and validating the utility and adoption thesis that we've been discussing for years. So now you're asking, what does this mean for investors? Now let's translate this into practical terms. XRP holders benefit. Institutions buying and using XRP increases demand and utility. Utility drives adoption. More banks means more real-world transactions, not just speculative trading. Long-term potential. XRP isn't just limited to niche use. It's designed to be core infrastructure for global finance. Imagine holding shares in a company like Microsoft in 1985. Most people didn't even understand the PC revolution. Those who positioned early, quietly, steadily, were rewarded massively. XRP holders today are in the similar situation. Early positioning in a foundational technology that institutions are already building around. So, if you look at the history of finance, every major innovation, telegraphs, railroads, credit cards, digital payments, started quietly with a few institutions testing the system before mass adoption. XRP is following the same pattern. A small group of financial institutions have quietly adopted it, tested it, and integrated it into their operations. Once momentum builds, retail and smaller institutions follow, creating unstoppable adoption momentum. It's like the internet in 1995. Amazon and eBay weren't household names yet, but the groundwork was already being laid by insiders who understood the opportunity. XRP is in that stage right now. So to wrap this up, XRP isn't just for retail. Institutions are quietly adopting it. Real-world metrics, speed, cost, liquidity prove why it's valuable. Regulatory clarity gives it a safe path for adoption. This isn't speculation. This is evidence-based analysis. Ladies and gentlemen, if you've enjoyed this breakdown, make sure to like, subscribe, and hit the bell icon. It helps us bring more updates like this straight to you. Well, ladies and gentlemen, I appreciate you if you make it this time to this end, where we get to have the candy from the Italian ice. Lots happening. I want to just bring some quick updates. Tie all this into everything as always. It doesn't surprise me one second that these internal memos and documents are finding their ways now to the surface. In my professional experience doing geological surveys, our outfit and our organization has been retained, and we have massive NDAs, we can't even talk about it, to do geological surveys for some of the most household name multinational mining outfits around the world because they didn't trust some of their own survey teams. And you can understand why. So when the stakes are massive, and I look at XRP as a commodity, so to me, I will always look at it and talk about it no differently than we look at a commodity from the trading size, the volume of the utility of what it represents and how it could be consumed by society. That's the most important thing. Some people are not paying attention to that, right? Again, the big boys are paying attention to that. That's very, very big. So again, the fact that they're experimenting and talking about these things in closed doors to massive institutional clients means a lot. And if you look at where these people are around the world, where reports are made for, it tells its own story. I want to point this out. Arizona's Senate Finance Committee advanced SB 1649, which would create a digital asset strategic reserve fund from states seized or surrendered crypto assets to a full Senate vote. The fund would be managed by the state treasurer, investing and loaning digital assets that meet specific valuation criteria. The measure faces possible executive opposition. But again, that's massive, because you can see that people are moving towards certain things. Missouri advances Bitcoin reserve bill to House committee reviving crypto treasury push. That's massive. Again, this is all on the west side of the tranche because the east side, we'll get to that, is pushing things. And of course, the rest of my rant, what I have and what I see and why. And this is not financial advice, and that retains us. Again, I want to welcome all the new members of our Patreon, all the new members of our membership channel. It's great to have you guys here. Ladies and gentlemen, broker-dealers regulated by the U.S. Securities Exchange Commission, but the SEC can treat their stablecoin holdings as regulatory capital, according to a tweet this week to a frequently asked question document maintained by the agency. The addition of a few lines in a frequently asked questions page on the U.S. Securities Exchange Commission website may open up the use of stablecoins in capital calculations for U.S. broker-dealers. The agency is instructing brokers that they need only give their stablecoin a 2% haircut when calculating how much they can be used as regulatory capital. So in this case, new question number 5 was added about what kind of haircut a firm should take on its holdings of stablecoins, the U.S. dollar tied tokens such as Circles, USDC, and Tether's USDT. The answer was 2%, meaning that instead of previous understanding that such assets were not considered measurable against a broker-dealer's capital tally or 100% haircut. The firms will be able to count 90% of those holdings. While this guidance does not create new rules, it helps reduce uncertainty for firms seeking to operate compliantly under current security law. What this means in English, ladies and gentlemen, this puts stablecoins on the same footing as other financial products. That means stablecoins are now treated like money market funds on a firm's balance sheet. So that's massive. Why I'm taking the time to talk about what's happening on the west side of the tranche, because I guess it's not as sexy, as exciting what goes on the east side with gold and its quest by the BRICS, the BRICS side to be a HQLA, which is happening. And that's a direct assault and attack on the treasury system and the U.S. dollar. Again, each day, if you're brand new here, ladies and gentlemen, please do subscribe, and you'll begin to understand why we talk about the soap opera of chaos and how we try to capitalize off the chaos by putting these things together to a narrative that's basically like a soap opera that we're watching every day. The characters, the themes, it makes sense to us. It is like the chorus of chaos, but it leads the way. Okay. The one thing also we're paying attention to right now, we're in the camp at some point. We believe that the things will go kinetic in the ME, the Middle East, because there's just too much over there and there's too much at stake. And this is our opinion. Again, not financial advice, because if you look at the overall situation, what's happening in the commodities world, there's a lot happening. We're going to get to that towards the end of this rant that's coming up. But again, pay attention to the pizza deliveries in the DC area around the Pentagon, because if all of a sudden those pizza places get a massive influx of orders, people are burning the midnight oil. So that's something to always pay attention to. These little tidbits of knowledge can help give you an edge about what's happening. So we're still in that camp, but I want to keep on going. So again, so we get that Gucci clarity. Ladies and gentlemen, on red days, those are the days you get conviction. Those are the days you find yourself. Those are the days that you understand why you're a financial mercenary and why you're doing this every day. You're doing this for the betterment of your life. That's why this is an art form. Again, it's this MOS it chooses you. You don't choose it at the end of the day, as far as I'm concerned. But I want to keep on going. So from my perspective, ladies and gentlemen, the immediate market reaction in gold to rising geopolitical tensions appears more than a short-term spike than a lasting shift. Using UBS, for example, they continue to view these tensions combined with tariff concerns, anticipated Fed rate cuts, and structural supply constraints as factors supporting a near-term gold move towards 6,200. But this came out before President Trump's latest tariff escalation, okay? So that's important, again. So if you're shifting to the broader macro picture, Washington is increasingly integrating infrastructure and innovation initiatives to ensure emerging markets remain connected to the U.S. digital payment networks. So even as China builds and finance approach reshapes the global economic landscape, we're seeing this happen with their introduction of exchanges. HQLA with gold. Everything they're doing, they don't want stablecoins to enable it, CBDCs. So in essence, the traditional euro-dollar system that we learned, the so-called milkshake is fading, giving way to a digital and more comprehensive version. Now, returning back to gold for a second, UBS maintains its near-term target of 6,200, citing tariff uncertainty, geopolitical risks, and unexpected Fed rate cuts as primary drivers for hedging demand. They note global demand could surpass 5,000 tons by 2025, while mine supply is projected to stagnate through 2028. Real rates remain supportive, and ongoing central bank buying underpins gold's structural upside. So even if price reactions appear muted, so given that this analysis preceded Trump's tariff announcement and Goldman Sachs' lower targets, it suggests UBS may actually hold a more bullish view. So if you look at it like this on the currency front, the dollar's dominance as a global reserve currency is under structural pressure. China's infrastructure-driven economic model presents an alternative alignment for many emerging markets with globalization fragmenting. The U.S. must now offer more than mere access to capital markets. This is huge. This is so important to pay attention to, and nobody's paying attention to it. But if you're here, you're paying attention to it, ladies and gentlemen. Today, Washington is pairing capital investment with technological and infrastructure support to create a full-stack offering that maintains dollar influence. Ladies and gentlemen, globalization is dead. It's over. It's done. Regionalism is coming right now. Again, that's what we're talking about, regionalism. If you got to rewind it, rewind it. Essentially, the dollar has ceded its role of store of value to gold, but as a medium of exchange, the U.S. is working to retain its relevance. So if you look at the U.S.-India recent summit, it exemplifies this strategy. Historically, the euro-dollar system allowed the U.S. to project monetary influence without significant physical deployment. Well, today, the framework faces competition from China, which is actively financing ports, power grids, telecom, and AI-ready data centers across emerging markets. We're losing the energy war with them, the kilowatt war that we spoke about. The AI we talk about all the time. AI is a kilowatt battle. Our data centers don't have enough energy. They're eating a lunch by coal fire. Ladies and gentlemen, the U.S. response combines financial support, technology, and strategic infrastructure to ensure these nations continue using dollar-based payment rails. This is more than a short-term maneuver. It represents a deliberate global effort to preserve the dollar alignment as the world moves towards a regional negotiated economic order. That's right. Globalism's dead. Regionalism is coming. Okay? Rather than offer protection and finance in exchange for dollar use, the U.S. now proactively provides infrastructure, technology, and strategic support in return for continued use of dollar payment networks. The euro-dollar system in this context is effectively obsolete. It's not going to vanish overnight, but its global influence will gradually diminish. And U.S. strategy is now reacting to China's moves rather than the other way around. So we're reacting to what they do, the same way that I tell you that we look to what happens in Asia and the opening markets. What happens, right? Japan, the yen, the BOJ, right? The metal markets in China now dictate everything. Again, it's a tale of two cities with this, you know? So turning back to precious metals, silver is showing notable divergence from gold. So particularly amid Shanghai's reopening, their holiday is over, there appears to be substantial short positioning in silver. None of this is financial advice. This is just my opinion and anyone that retains any capacity. And if you want to understand how we basically link all this together, come and join the Patreon with us. We'll show you. There's a lot of volatile swings right now, ladies and gentlemen. So, you got to watch the dollar very carefully. The dollar, whether it weakens or strengthens, is going to tell a story. That's what we're keying off. Again, when the market opens and what happens in the metals, gold, that's what's happening again. So otherwise, both gold and silver could face downward pressure. So again, in my opinion, gold's got to get back above 5,200. It's got to get back above that. And until then, it's range bounds. Again, people are respecting the ranges. That's what's happening with that. So in summary, 1 + 1 is 2. From an institutional standpoint, the key themes are clear. Gold's structural support remains intact. The dollar's transitioning to a full stack medium of exchange strategy, and markets are navigating the shift landscape of U.S.-China competition. Volatility in silver and gold reflects these structural dynamics as much as short-term sentiment. So you're going to have to keep an eye on evolving macro picture, particularly the interplay between geopolitics, monetary policy, infrastructure-led economic competition. Ladies and gentlemen, finishing that word salad. XRP will face pressure right now because there's themes that can be influenced from geopolitical and geoeconomic things, right? If you look at Bitcoin, when the AI trade unwound, right? You saw Palantir come down. You saw these big names that were leading the way. And when the Fed nomination came in, again, we told you in other videos that took the wind out of the sail for the AI market. It took, people thought interest rates were going to be zero. It took the wind out of a lot of things. And if you look at gold and Bitcoin, go back a few years, Bitcoin's flying high. Gold was in the gutter. Look at it right now. Gold is flying high. Bitcoin's in the gutter. Why we say this is, look, you can go down to your local Costco and buy gold. You can touch it. Some people still don't fully grasp Bitcoin, right? That's just what it is, in my opinion. Now, look, if you look at this, and again, XRP is being hoarded now, right? How many more big names you need to have to come out to realize that your conviction is going to be tested now in these down days? Again, watching things change is a hard thing. It's going to test your own conviction. It's going to test your own intelligence. It's going to test you. Why did you get into this? I see people in the comments talking about, that it's one this, it's that, it's down this, it's down that. If you're not happy with where the position's going, you have your own self-determination to close out your own position. If you're day trading with too much leverage, not financial advice, well, maybe you got bitten by the snake of greed. I don't know. Again, this is the future. We're watching things change right now in our face as the East side tries to undo the world global order financially. The West side is making moves. The U.S. dollar is treasury backed. Ripple Treasury is married and woven into it institutionally. Again, I don't know if I need a neon sign, to put up to show you this. But again, there's going to be flack. And I believe we're going to go lower first. I'm in that camp. And to me, I like the red days. To me, I get more conviction in the red days because I know what's coming in the future. Again, this is my own professional opinion, not advice from anybody that retains myself or my organization. Things are changing right now in front of you. The destruction of globalization to regionalism is the first piece. The pushing out of China out of Latin America is another piece. China is not doing as much investment now in the continent of Africa. They're changing that. They're changing everything. You're seeing things change. Again, the big thing to pay attention right now, if there's kinetic action in the ME, that will change the narrative for a second. We have to wait until the narrative comes back more to why we're in what we're in. When you go from shifting from one asset class into another asset class, you get blasted in the face first. You get blasted in the face first. You take that blast and you get back up and you take it and you say, you know why? Because I know the good days are coming. Because we're in the camp that before midterms, the printed to win it's going to happen and they're going to inflate the prices of assets. Yes, that's the camp that we're in. And if they're in the printed to win it campaign and they inflate the price of assets, what does that do? You know what that does, but you have the stomach and the conviction to hold the line until that comes. Or were you always front running this? Again, I never asked any questions when we were retained, our organization, to do geological surveys for the household mining names that they are globally. They had their own teams doing it, but they didn't trust them. They wanted to know exactly what it is because they wanted to know what it was. So as far as I'm concerned, when you look at certain documentation that makes its way to the surface, that's people in this game wanting to know exactly what this does from their big trading partners. They want guarantees of their opinion. They want a guarantee of opinion. Nothing's guaranteed in life, but they want opinions from benefactors they work with and for that. What is their guaranteed take on this? Not guaranteed outcome, guaranteed take, But listen to this, ladies and gentlemen. Listen to this factoid. Digital asset drawdown remains of lesser magnitude compared to their prior cycles unwind. Peak to trough in the prior cycles, Bitcoin saw a 77% correction, Ether 82% correction, and XRP a 77% correction. SOL saw one of the most aggressive corrections, falling by 95%. In this content, as things currently stand, the ongoing correction remains of lesser magnitude compared to the prior cycle. So for crypto market participants, the question remains whether the long-term bull catalyst for the digital asset space, namely institutional adoption, pro-crypto policy in the U.S., will stave off a correction of the magnitude seen prior cycles. Bitcoin's drawdowns have been tempered between the 2017 and 2022 cycle. Between 2017 and 2018, Bitcoin saw an 83% drawdown, 77% in the prior cycle. Ladies and gentlemen, again, this is not financial advice. I'm trying to put factoids. So what we see from the satellite view down, regionalism is being born. China wants gold to be the same as a treasury system so that they can take loans against gold. That's why they hoarded gold. The Fed nominee, man, this guy has changed, like we said in previous videos. He changed the whole discussion in boardrooms globally. That's why when I told you that when we sold gold in the futures market for anyone that retains any capacity, right? This was our thesis. And I told you that week I had to go fly to meet customers that just retained us. The same way there's not going to be a video tomorrow on Thursday because we're going to see new customers that just retained us as well. But I'm prepared to put my reputation on the line. I'm designed for this. That's why people retain us in a capacity. So if you're here, I love all of you that you're here with us. If you hate on mine, keep a hate on me. I don't care. So when you look at all this and you bring this all together, the big things to pay attention, watch the Asian opens always. Watch what happens in Japan. Watch what happens in China with the Asian metal markets. Watch that. Again, Europe is it is now stuck in no man's land as far as I'm concerned, right? It's not looking good over there as far as I'm concerned, right? It's not. But again, so you asked me for validation, not validation. I guess if you want to think someone's a villain, think I'm the villain. I'll play the role of the villain because your mind has to be strong now. Your mind's the villain because it fights greed. So again, every day, Ripple and XRP march forward. We just went over what stable coins, how that's going to be viewed. That's massive. RLUSD all the way, baby. But XRP, ladies and gentlemen, we are holding, in my opinion, not financial advice, the Gucci cards, the Gucci conviction. It's here. As the Remora, we're swimming underneath everybody. We are. But the Remora doesn't stop to ask the shark, are we going to the left or the right? It just swims. It eats what's in its teeth. It gets the free meal, and it's protected because it's flowing with them. So again, XRP being this leak, phenomenal. The banks, Deutsche Bank, phenomenal. Societe Generale, phenomenal. Licenses, phenomenal. Again, we're still in the camp that something gets done, but the whole world is changing in front of your face. It's changing in front of your face. So if your conviction is tested because you've been holding it for something for so long, then if it's up to you, throw the towel in. Throw the towel in. Why did you get involved in this in the first place? Ladies and gentlemen, the fact that hedge funds and everybody on the street got out of Bitcoin, they started getting out of Bitcoin immediately after the news came in about this Fed chairman. They got out, but they were also taking profit at the tops, because they're not going to marry the position. They're not looking at it as, I'm going to get here and it's going to go there and I'm going to be, yay. No. For them, like myself, this is a discipline. Being a financial mercenary is a day in, day out thing. You must do this every day of your life. So you learn what to do and when, and you learn to look at the signs. So your conviction is going to be tested now. Oh, yeah. We could drop heavy from here. Like I told you, you got to take the blast. You take the blast because you know you got something valuable. You don't get shaken out. You don't care what anyone else says. Ladies and gentlemen, we probably know a lot more than any pundit is ever going to know about this space because we live it. We live it. They're just tourists here now. We live this. And again, ladies and gentlemen, XRP is woven in to the West Side. So I don't know how much more you need to understand this. Don't lose your Gucci conviction right here, that clarity. Don't give it up. Don't do it. Don't do it. No matter how bad this may get, because again, if ME goes kinetic and those pizza shops are pumping out food, assets are going to drop. They're going to get blasted. Wait for the appropriate levels. You would not go swimming in a rip tide. You wouldn't. It's not going to work out well for you. You wouldn't. But if we're correct in what we're thinking, where we're this going, and when printed to win it begins before the midterms, ladies and gentlemen, you'll know that all this pain, this suffering, everything that you may be mentally going through right now was worth it. And if not, throw in the towel. But ladies and gentlemen, if you want to keep understanding every day about how we tie this in, do subscribe, comment, and I appreciate you. I'll see everyone later in the Patreon tonight. This content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. You move now, be remembered. This is not the end of the story. This is just the beginning. This opened your eyes? Smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all.